Ladies and gentlemen, zero fluff, zero intro, zero outro. We will show you the disclaimer, but I want to make you a better trader. And we're going to do it right now. We're not going to waste your time. Just read the slide, pause it, hit play when you're done reading it. Thank you so much for reading that. Okay, so is it possible? Is it possible that I have 11 names written on a card here? I guess you guys can see it. Tesla, Beyond, AMD, Shopify, Avaya, Ring. I know I write like a doctor. L Brands, Micron, Costco. I crossed out Microsoft there because I was done watching it, but Microsoft and Double L. That's Lumber Liquidators. And I pointed the arrows at the direction I want. You can see they're all longs with the exception of Lumber Liquidators right there, which is down. Okay, so I wrote down 11 names on a list. There's something that all these names have in common. Now, throughout trading, I have helped thousands and thousands and thousands of traders. You lose count after being a broadcaster for 12 years, make a lot of money in the market. And I'm not conceited. I understand that there's some strategies that you're going to do better than me. Even though I'm going on my 21 years of trading, you might be brand new. And I promise you, there are several things, at least one, that you do significantly better than me. Whether you recognize what it is, that is your journey as a trader. So today I want to give you what I like to call freevolution. It's like free and evolution combined to freevolution. Sounded kind of corny, so I just made the title of this video Improving Your Trading Now. Then we're going to go ahead and we're going to talk a little about Netflix and things like that and whatnot. And maybe how you can trade Netflix tomorrow after the report. So I'm just going to simply go down the list again. Just gonna, I know it looks like backwards because I'm holding it up to the webcam. Actually, it looks normal. So I'm gonna go with Tesla, Beyond, then go with AMD and down. And these are the names that I discuss in the Newsbeat live room in the pre-market, and then I just go down them, and those are the names I'm gonna discuss with you today. So there's something in common that all these names share. I'm gonna show you a 5-minute chart. I'm gonna show you a 5-minute chart here of these names, and there's something in common with every single name that could have made you money in this chart and Tesla and Beyond. The name we talked about yesterday, we called this name, we actually called this name the next Tesla, ironically, even though Tesla was our favorite name today. I was watching Beyond 2, obviously. AMD, there was something that you could have done in AMD. There was something that you could have done in Shopify. Avaya, AVYA, the same strategy on every single one that worked. RNG. Does anybody want to take a guess what it is? Does anybody in the room, while I go through this, want to guess? There's one strategy that worked on every single one of these names today. So obvious. Micron, there was Costco, perhaps, perhaps in Lumber Liquidators, right? So the strategy is actually the Mark 5. If you literally bought through the Mark 5 and set your targets at day highs for the names you go long and the one name that you go short, double L, a target at day lows, you would have actually had a stop and target on every single one of these names, and every single one of them would have hit. And I'm going to show you the Mark 5. I'm going to show you what it looked like before, and then I'm going to simplify it for you. So please, I'm going to show you something. I don't want you to get scared. I don't want you to get scared. Don't worry. I'm keeping all my clothes on. I promise, but I don't want to scare you. Look, here it is. Mark 5. Lot of words. Blah, 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 blah. If this, if that, if this, if that. This is like an algo, right? If this, if long, if this, if that. Blah, 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 blah. So what is the easy way to describe what the Mark 5 should be? Is there an easy way for me to teach you a strategy right now that's going to improve your trading? I don't know, maybe indefinitely. Maybe after I show you what I'm about to show you today, your trading will be better forever. And I intentionally did not put in a link to sign up for my room. If I put in an email, and if you want to ask questions, Newsbeat at t3live.com. You're more than welcome to email, but I did not share a link to join up. So if you think I'm pitching you, You are sadly mistaken. I am genuinely here with zero other purpose than to help you become a successful trader. And if you can appreciate and respect that, kindly hit the like button so we could get our message out to as many people as possible to help them, especially if you enjoy our content. Okay, so we're gonna make it real easy for you, and we're gonna start by just literally rewriting this thing. So here's the thing. So the first time a name does not break a prior 5-minute high, get ready to buy it then, and I'll explain it. It breaks a 5-minute high with a stop at the low of all you bought through. That's it. And I'm going to explain what that means. Target day highs. Okay, that's it. Now, what does that mean? Well, let's start off, and I'm going to explain it as best as I can in Tesla. So we're looking, you choose a Newsbeat live room name, which is obviously I do create the list. So we're going to start off with Tesla and we're going to move down, zero bias, and we're going to see how it works. So you're basically waiting here. And by the way, my day was pretty much done at 9:32 a.m. and I forgot how many seconds because I caught the Tesla one and done. It was our number one name that we were watching. It was the only name that was in our tweet out this morning. Watch Tesla for a long. Most of us made our day. One member had his first four-figure day today. Congratulations. New member of the room. Always love seeing people do well. Okay, so what you're basically looking for here is a 5-minute bar that doesn't go through a prior 5-minute high. So you have to wait for the first 5-minute bar to close. And you have to wait for the second one to close before you could get ready, right? Because here's the first 5-minute bar, and this is a 5-minute chart. Here's the first 5-minute bar of Tesla. Here's the second. Did this 5-minute bar right here break the prior high? It did. How about now? Nope. So notice right over here, the high of this third 5-minute candle didn't break the prior 5-minute high. At this juncture, what you're waiting for is you're just waiting to buy through the top of the next 5-minute candle that breaks. That's it. It's that simple. You set a stop, and I'll show you how to do that. Next 5-minute bar, did it break up through the prior candle high? Nope. Next 5-minute bar, did it break through this 5-minute candle high? Nope. Next 5-minute bar, did it break through the prior 5-minute candle high? Yup. So right over here, you count 1, 2, 3, 4, 5, 6. This sixth candle here broke through the top of 539.19. So the number 6 candle broke through the high of the number 5 candle, and you would have entered there. Immediately, if you entered at 539.19, you would have been up $1.30 on that candle at best. Your stop would have been down here, by the way. You would have had it, so you would have had a hard stop down there. You would have had a hard stop down there at that lower line right here, and you would have had an entry on this candle through there. So that's basically the top line being your entry, the bottom line being your stop. And if you did that in Tesla, it's obvious to see that your target is day highs. I'm not sugarcoating the targets, and it hit it right here and it blasted through. So you could already see your target and stop ahead of time. It's not like it's a secret because you already know where you're going to go. Your stop loss is still down here, and you could see you clearly went up through day highs, making this trade successful. As long as you follow these simple parameters. What I'm doing here, ladies and gentlemen, is you have to love me because I'm a college dropout, and I try to make things as stupid and simple as possible because they're easier for me to understand. The power of a good teacher is to not confuse the people that he or she is teaching. The point is to make it as easy as possible. So just to show you again, this is the prior Mark 5 strategy. And I'm just trying to simplify it like this. See, prior, new. And I'm just trying to simplify it, make it easy as possible, giving you guys a target, trying to spell it out as simple as possible for you. Okay. and showing you where a hard stop is. Nothing vague on this one, nothing confusing. Tesla worked. Beyond Meat came out, was very bullish in Beyond Meat, obviously. Okay, so again, just to start, and you'll get used to looking at this. Here's the first 5-minute candle. Here's the second 5-minute candle. Notice it broke the prior one's high. So you're waiting. You're waiting to see when it doesn't break. Broke it over here, broke it over here. Oh, right over here on the fifth 5-minute candle. Notice the high of this candle, that high tail right there, the tippy top of the tail. Notice that it didn't break the high tail over here. So it didn't, pretty much the 5-minute bar did not make a new day high at that point in this case, and it wasn't able to break out. So basically, the next time a 5-minute bar breaks up, you're looking for a test of day highs, whenever that may be. I'm taking you through this as showing you through a real-time scenario because I want to show you what it looks like. Right over here, you didn't break out either. Next bar, you did. So next bar, and this is the 1, 2, 3, 4, 5, 6, the seventh bar right here. You could just very simply see you're entering through here. Your stop is down here. In the case of Beyond, you would have been risking hard stop, $1.88. It's a very volatile name. Yes, it moves. $1.88. Your target would be 119.17. Generally, when you hit the day high, you get above the target. So, like, I'm not really selling exactly there. I'm selling like right above there as a broad generalization. And some people just let it run with the stop. So you bought in there. Here's the next 5-minute bar. Didn't go to day highs yet. We need to get to the top over there. And you can see we haven't gotten there yet. Next, nope. Next, nope. Next, nope, nope. Ah, right over here. Target day highs. Your stop is down here all along. And you're basically in this position, 3, 4, 5, 6, for about 30 minutes for it to go to day highs. Took a little longer than the Tesla, but you could see how it worked. Okay, AMD. These were more my lower conviction names that I passed on. All right, so AMD opened over here. This big green bar was the first 5-minute bar of the day. Pops up. Next 5-minute bar right over here is the second 5-minute bar. Didn't break the prior bar's high. Next 5-minute bar, you buy in, and it immediately shoots up through day highs. Success right away. Your stop is all the way down here. Now, you might sit here and argue, well, Mark, in this case, for example, and I know it didn't get even remotely close here, but you might argue, Mark, it's not worth it for me to make, a day high of this much to risk this much. And that's a fair point. And yes, it would have actually shot up higher and you would have had the potential. I'm showing you the best and worst case scenarios every time, and anything else is in between. But you know that ahead of time. The point I'm making is you can actually see where you could have hit this day high before it happened. See that? And granted, in this case, if you bought in, you're pretty much up money immediately. You shot through day highs, giving you a nice, beautiful, quick trade. Shopify. Here's another one. Opens up over here, shoots up. A lot of people look at this 5-minute bar and they think they missed the move. Next 5-minute bar breaks up again. You're waiting to see a 5-minute bar not break a prior high. Third 5-minute bar comes in, happens again. And right over here, for the first time, you digest. Right over there, you digest down to 463.92. And you know that you could buy through the next 5-minute bar high for a test and break of day highs. And that happens immediately after, shoots right up. And a lot of people are catching a couple points on a move like this. I know you can make whatever argument you want. Do you want to be consistent? Do you want to bat over 75%? Do you want to lower your psychological toxicity? Do you want to not need to know a million different things about trading? Do you really believe that trading can be easy? Are you really shocked that there are traders out there who are doctors, lawyers, engineers who are struggling with the environment, and here are just some kids who are college dropouts or people who didn't even major in finance and they're doing fine? Do you really believe that trading can be easier? And if your answer is yes, I will tell you you are absolutely right. You are 100% right. So you could see on Shopify right here, buy through right there, stop over here, target over here, and you're seeing again, a lot of these targets, initial targets are lower than where your stop is, but again, a lot of times they go up more, and I just want to make it simple to understand. I'm not saying you're forced to sell it over here, but I'm just showing you a way to catch a stock to retest the day highs. So what I'm showing you is after a stock hits day highs and basically pulls in, I want to show you a level of where you can have a risk reward to retest that day highs. And I am telling you, because I went over these names, it's going to work 11 out of 11 times. These are the 11 names I was watching. They were all news names, all upgrades and whatever. Avaya, for example, was upgraded by Goldman Sachs along with Ring Central today. Here's an interesting example. Start off with a red bar. Boom, right over here. Second bar doesn't break the prior bar's high. Now remember, it gapped up. We're looking to go long. If it gaps down, which in this case is only lumber liquidators, we're looking to go short. So Avaya doesn't break the prior candle high. This one doesn't break the prior candle high. And right here, this one doesn't break the prior candle high. Then right over here. Right over here. You break through 1360. You have your stop at 1349. And you just absolutely explode. I mean, just boom. You just skyrocket up through that level. Beautiful, right? Ring Central was another name on our list. You can actually see it right here. This was the other name upgraded by Goldman. I was more focused on Avaya, but this was on my list, so I don't want to cherry pick anything. You can see right here, goes up, doesn't break up here, doesn't break up here, and then right over here, you break through the top of this candle and go through day highs. Look at that. You break through there, your stop is obviously right over here. And you are managing to get up there and shoot up through this level. Very easy. And I really mean, by the way, I genuinely mean with every ounce of my being that this is very easy. Like, I think this is one of the more simple strategies out there. I know a lot of people like to throw labels on things and, have very, fancy terminology for complex things. I humbly believe that if I can appeal to the lowest common denominator, like I make good money. I am one of the lowest common denominators in my opinion. Like I make money keeping things simple and stupid. I'm just, I look at some of these more, you have to be super quick and super complex. As soon as you start adding those things, and I do have strategies that a lot of them you have to be quicker and then some are slower, like I get it. But if I can show you a strategy that works for you, and I'll be doing more of these strategies, and I'll be showing you different strategies that work the majority of the time. The other day I showed you a strategy that worked 85% of the time on Friday. Then I come in today and I show you a strategy that worked 100% of the times on the on the names I'm watching today. And the point is, I humbly believe that one of these strategies are going to resonate with you. And you're going to be like, Mark, I wish I was just doing this all along instead of the million other things. I guarantee you you're good at something, ladies and gentlemen. I figured out the things I'm good at already. I have the blessing of being a trader for going on 21 years right now. As of 2020, I started in 99, active intraday trader. And all I am trying to do, I wish somebody did this with me a while ago. All I am trying to do is help you discover one thing that you could be consistently good at. You're going to chip away whatever psychological toxicity you have. You're going to start chipping away at whatever potential losses that you've had in the past, or you're going to continue to grow from whatever potential wins you've had in the past up until today because you're going to find something consistent. And if you like this sort of stuff, again, just go ahead and slap the like button right now. So L brands gapped up, pull down. As I said, I'm not going to sugarcoat anything, right? Pull down, pull down, pull down. And right over here, for the first time, it broke a prior 5-minute bar high. So you're basically buying right over here on this candle. and you're buying in your entry and stop loss is always the prior candle. So you're buying through 2006 and your stop is 1993. So you're taking a 13-cent risk here. But look, all of a sudden you take target profit and you could see it before you even enter the trade, of course, which is the beautiful thing. You could see that you're looking for a tested day highs. And as I said, I didn't want to sugarcoat anything. So you could just see right here, never breaks down through this day low, pops up, digest, pops up. At the worst case, when you enter through 2006, I just want to point out, at the worst case, even if you held it all the way down here, you're down 6 cents on L brands. 6 cents at the worst, at the bottom. Like if you try to lose more than 6 cents on this trade, you would fail miserably. All right. I just want to point that out because again, I could show you, you buy here, sell here, stop here. Nobody talks about the journey. Some of these journeys are harder. Everybody likes to say, here's step A, and here's where you end at Z. And it's either you hit your take profit or you got stopped out. And many people like to do that, but they don't talk about the journey. I think it's very important that you discuss the journey because there are people who get shaken out. There are people who can hold and do well. We need to talk about that. That's something that is an acquired skill. I mean, by constantly doing ideas like this, you know, you are literally expanding your holding power by a trade like L-Brands. Even if you're only down 6 cents, and many of you are like, that's not a big deal. For me, it isn't. Stock comes all the way up, breaks day highs right over here. Look at that. You actually hit a beautiful take profit target on an L-Brands Mark 5. Next was Micron. Wasn't really crazy about this one, but it was on my list, and as I said, I wouldn't sugarcoat it. Here's the first 5-minute bar. This big green candle. You could see the next one didn't break the high. You're simply buying through. Happened right over here. So you enter through 57.81. Your stop is 57.59. And by the way, this is all programmable. Stay tuned, ladies and gentlemen. Newsbeat algo will be coming out. It will be exclusive and to start for Newsbeat Live members. I can promise you that. Look at that. You buy right over here. Look at that. Don't even inquire about it right now because I have to get all my ducks in a row. So please don't reach out to T3 and even inquire about it. But look at this. You buy right over here on Micron. You buy. Look at that. Boom. Breaks the day high right here. Look at that. Beautiful. Right? Easy. Costco, this was see this one I think was I'll erase my wedge because I'm trying to make it as simple as possible. All right, so you have a high, here's the first 5-minute bar, second, third, and right over here you could see it doesn't break a prior 5-minute high. Right over here it's a double top at 311.49. It has to break 311.49. It has to break the prior high to enter. Doesn't happen, doesn't happen. Right over here it happens. Look how sloppy. Look how sloppy. Right over there, it happens. Right over there. Right over there, it happens. So you're entering here through 311.33, and your stop is 310.43. So you're risking 70 cents on Costco to potentially get over here. Now, this to me, I consider one of the more difficult trades because you're sitting there watching your P&L chop around. You're not up a lot, you're not down a lot. One of those, and then all of a sudden, after a while, you're just up money and it works. But again, not sugarcoating it. Here's the bar that you bought through to break out. So you basically bought through 311.33 and you had a hard stop at 310.43. The bottom of this candle here is 310.45. The bottom of this candle here is 310.47. The bottom of this candle here is 310.53. It never stopped you out through 43 cents. Now this one I consider the ugliest and hardest one to catch. But again, it worked. I didn't do this one today, but it worked. You can obviously see that. Microsoft opened up right over here. And again, I'm taking you by going through these steps, ladies and gentlemen, just so you know, you are improving yourself mentally to spot these things in real time. So when you come tomorrow, the more we watch this video, you're gonna be like, okay, I see exactly what Mark Melnick is talking about here. I got to do it. And if you're joining us here a little late, we're choosing a name giving in the Newsbeat live room. I take care of step one for you. You watch step two. And step three isn't really a thing. That's just more of your target. You basically were waiting for a first time a name does not break a prior 5-minute bar high. As soon as that happens, you're buying through the next time it breaks a prior 5-minute high. That is the whole strategy in a nutshell. I know it sounds too simple. It sounds too stupid. You don't need to be a member of my service to execute this strategy, but you do need to be a member of my service to get the names that I'm choosing. So am I cherry picking names in which this worked on today? If you consider cherry picking utilizing every single name that I have written down here, then yes. I mean, step one to me is an important step. But for whatever reason, if you cannot afford my service, that's fine. At least let me bring you value, right? That that's all I'm asking for. And again, if we're clear, if you're interested in joining my room, one thing you will not find is a link in the description of how to do so. Reach out to T3. Take the time, write an email. If you want to find out more about what we do here, reach out. I'm taking the time to help you for free. You don't want to join? I'm fine with that too. Just garner value, thumbs up the video. That's all I can ask for. Right over here, this third 5-minute bar you see did not break a prior 5-minute high on Microsoft. And then this bar did right here. So, oops, sorry. Your entry is right over here. And your stop loss is right over here. Now, you might be looking at this trade and you're thinking to yourself, Mark, look, you would have gotten stopped out by 3 cents here because it broke the prior low. But you actually wouldn't have, and I'll show you why. Um, just one second. I'll show you why. So you're looking here and you're probably like, Mark, you would have gotten stopped out here. You wouldn't have because when it opened at 166.92, let me show you on the 1 minute. When it opened at 166.92, which was right over here on this bar, it actually flushed down, broke that prior low, and then went up. You see that? It didn't go up and then all the way down. It went down and then up. So just to show you, just to be perfectly clear, in this situation back to the 5 minute, you wouldn't have been in the position to get stopped out in the first place because it would have gone down through 166.87 before entering the top, and then you would have been able to reset your stop there at 166.90, and it would have never happened. Again, target would have been day highs right over here, and you can see you did it on that same 5-minute candle. Excellent risk reward, easy money. Last but not least is lumber liquidators. Now this one is a short, so just so we're clear, you know, you can't apply the 5-minute high. You have to change the word high to low, and anytime you see the word high, you need a low. And where it says stop at the low, you need stop at the high. But I'll walk you through it just because I don't want to make it, I don't want to show you a whole new set of rules for just one short idea, but I will teach it to you in more of a visual capacity. I think that'll be better than reading it. All right, so we're looking for lumber liquidators in this case, just so we're clear, to not break a prior 5-minute low. And as soon as it does that, then we're ready to short through or buy puts or however you would like to trade or sell calls, whatever makes you sleep better at night, in lumber liquidator. So we're waiting for a 5-minute low to not break, followed by that 5-minute low breaking. Right over here, here's the first 5-minute bar, breaks that low, nor breaks that low again, and right over here, it doesn't break a prior 5-minute low, so you're looking to short it, and you can just see right away it works. Right away it works. So your entry is on this fifth candle here, 1, 2, 3, 4, 5. This fifth candle here, you're shorting through 866 with a stop of 874, and your target is 863. I know, you're sitting there saying, why would I do it with a 3-cent target? Usually you go through as I showed you all the examples, but you get to see this ahead of time. You get to see this ahead of time. And if you sat there and you wanted to hold your stop above 874, the high right here is 873, you would have been able to ride this down all the way, because once you set your stop at 874, the highest it went is 873, not before you were up money, and it went down all day. But just for the sakes of not saying, oh, this is what you should have done in this situation, I just want to show you and say, look, this was your little flush here. Got a nice little flush through day lows. It broke 866, went down 11 cents. You were risking 8 cents and digested, and it was choppy and slow. It's a sub $9 name. But again, I didn't want to sugarcoat and show you the, only parts of what I was looking at, or here were the examples that worked, and I'll only show you that. Believe it or not, when you actually get to know me, I actually enjoy showing you examples that don't work when I have these strategies, because those are the ones that are going to help me learn and grow. So I actually appreciate the strategies where I apply something and it doesn't work, because I get to learn and grow from that. In this example, the Mark V strategy has been around for a while, but it worked 100% of the time today. I could show you what I did today, but maybe I will if we have time. But I want to show you um, I just want to show you again this show. You only need one strategy to lift you up in the top percentile of traders. And I have a little quote for you down here. Be a master of one before you try to be a master of 10. Let's talk about Netflix earnings. Okay, so I was a little bit confused on what to do with Netflix. So as I said yesterday very clearly, I'm ignoring it. I thought the numbers would be bad and the technicals were good. So I wasn't sure if to go long or short. So since I had contradicting opinions with bearish fundamentals and bullish technicals, I decided to pass on the name. Just so we're clear, I gave Newsbeat Live members TDY for a long overnight. And again, give is a strong word. It's what I called on my earnings sheet. Newsbeat Live members do get free access to all my earnings plays. And so far, we're doing very good. We're doing very good this season so far. But back to Netflix. Um, so this is obviously an earnings name, and I just wanted to further analyze it for you guys, because you could just easily see what it's doing after hours. They popped it up, they dragged it down through the mud, and now they digested it up. They announced $1.30 a share. That beats the 53 cents consensus estimates. 5.47 billion is slightly ahead of the 5.45 billion expected. Everybody focuses on the streaming paid net additions numbers. To me, that I mean, I understand the importance of it, but here's the problem. Here, I'm going to show you what's good. I'm going to show you what's bad. Okay. For next earnings season, they announced $1.66 a share. That's ahead of the $1.19 expected. That is pretty good. And you might be saying, wow, they're earning so much more. That is because of the net additions. They added another 8.76 million subscribers. That's great, right? So the revenue though is 5.73 billion versus 5.76 billion. So you have to sit there and you have to at least wonder, like, Mark, how are they going to announce $1.66 a share? How are they going to do $1.66 a share and have 5.73 billion in revenue as opposed to 5.76? Like, why wouldn't they be beating on revenue if they're making more money? And that I don't see any analyst out there asking that question right now. But I'm asking it, and I also have the answer. You ready for this one? You ready for this one? Netflix says they're planning on increasing content spending across the board. Says content spending to grow roughly 20% in 2020. Says the Crown viewership has been very durable in the UK and the US. Durable? Okay, I mean, what is that? Like a raincoat or something? What is that? Like was it a condom? Where do you use the word durable? I guess when you're referring to the Crown. They said losing rights to the sitcom Friends has no impact on viewership. Okay. Says The Witcher delivered viewing hours for the company and says viewers loved it right away. I couldn't make it past look. I've been a Game of Thrones fan maybe 10 years before it aired on TV. I used to play the collectible card game. I won a Gen Con World Championship in the game. I met George R. R. Martin. I met George. I loved it. I love this type of stuff. I'm a fan of these type of things. I could not make it through the first episode of The Witcher without looking at this and saying, I don't believe this garbage. This is all nonsense. Now, I heard it's good. I have to give this thing another chance. I couldn't make it past the first episode. Now, why am I saying this? Because Netflix are saying viewers loved it right away. Maybe I'm not the lowest common denominator here, but I did not love it right away, and I respect people who do. I like that sort of stuff. I'm a big fan of it. And they say they don't want to exploit users with advertising. This is another very interesting thing from Netflix. How many people are watching Amazon Prime and all of a sudden see commercials on the TV shows or movies that they purchased? How many people out there have noticed that? I have. Like, what's up with Amazon Prime throwing advertisements at me like they're like 95 seconds of advertising. And I'm like, are you kidding me? I pay for this and now you're charging me advertising? I don't know, Jeff Bezos. You're not going to keep Melnick around too much longer if you keep screwing up like that. I don't have much time in my day. I don't have time for nonsense and petty things. Stop advertising for me. I'm paying for your service, you lovely human being. So mad respect to Netflix for saying that. The problem is, even though Netflix is growing their numbers they're paying 20% more on their content. So what are they paying on content? What, 4 or 5 billion? So what are they dropping? Another $1 billion on content for 2020? I mean, that's not good. However, I will say this because I know the analyst and I know the analyst real well. The analysts are going to come out tomorrow. I am telling you right now. The analysts are going to come out tomorrow and they are going to upgrade and defend their higher price targets on Netflix. So what I wanted to do is I showed you the Mark V. Is anybody curious right here? How many of you guys are curious to know how the Mark V worked on last Netflix earnings? What if I showed you the last time Netflix, can I show you here? Can I here? No, that's the wrong one. I'll have to pull up another screen, but how many of you guys want to actually see Netflix Mark V the last time they reported earnings back on to trade October 17th when they reported it on October 16th? Well, I'm going to give that to you, and I'm going to show you how the Mark V, the strategy I just showed you tonight, would have worked on Netflix on last earnings. So, but the screen has to go black just for a second. You're not losing me. Just listen to the sound of my voice. Screen's black. You hear me? I just have to show you this chart of Netflix. And bang, right over there. Easy, easy. All right. Let's just stretch it out a little. All right. Beautiful. Wait, what is that? Yeah, let me get rid of the aspect ratio. There we go. Remove this little advertisement. Nope. Okay, so right here, what you're seeing is Netflix, the last time it gapped up on earnings, it reported October 16 after hours, and it actually gapped up. You can see very clearly Netflix gapped up here, October 17. So let's look at that Mark V I showed you. What if it worked here? So you could see it breaks the low, 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 breaks the low. The Mark V short would have worked. The Mark V long would have failed right over here. So this was an interesting scenario because the irony behind this is I actually remember doing this Mark V trade short. I actually remember doing this trade short right over here because the numbers were garbage. This time, I don't think the numbers were that bad. And by the way, I know every analyst is going to defend it. I know people are going to say, Mark, you don't know what you're talking about because the net subscriber additions. And I remember doing a video on October 16th. You could go find it if you want, an old Newsbeat show from October 16th. bashing Netflix's earnings, saying how bad they were because they missed across the board. And every analyst came out and defended it. And 2 days later, it went from 308 to 273 after earnings. It literally dropped like 10% in value in 2 trading days on Netflix. I will say this time around, it's not that bad. I will say honestly that Netflix numbers are a little bit better than I expected. They basically have an interesting opportunity here. Why? Not, I don't believe that they should advertise, but I do believe that they should have some form of way to charge somebody an extra dollar or two. I think that would go a long way for Netflix. I don't know if this is going to involve pay-per-view fights like the Conor McGregor type stuff that UFC does. Obviously, it doesn't have to be down that line. I'm just more thinking out loud here. But they have to figure out something to do with their subscribers because the problem is they're hemorrhaging more money than these subscribers are going to bring, at least in the short term. You have to think like, what is a Netflix subscription these days? Is it still like $10? Like, how much is a Netflix subscription? How much is it a month? I don't know. I think I'm locked in at a better rate. 10 to 15, 12.99, 11 to 14, whatever it is. People, what you don't look at is that when they add a subscriber, they are losing subscribers too. So I just think if you're at 9.99, yeah, I think I'm locked in at a good price as well. I'll just say for Netflix, the numbers were a little bit better than I expected, but I am willing to go either way on the table when it comes to Netflix. Let's talk about IBM real quick. They reported earnings. Beautiful gap up, stocks up a bit over $5 at the moment. And this is a very interesting company. I remember loving my IBM Aptiva. Do you guys remember that? Personal compute when they made PCs. So here's the interesting part for me on IBM. They announced 471 a share. That broke the 468. Okay. 21.8 billion ahead of the 21.64 billion. Okay. But here's where there's emoji hearts in my eyes. They see their fiscal year 2020 adjusted earnings per share of at least 13.35, and that beats the consensus of 13.29. So they basically put in a floor that is higher than the ceiling of the analysts. They say their Q4 cloud and cognitive software revenue will be 7.2 billion. There's a lot of money there. They're saying there's continued momentum in hybrid cloud. This is the company that's going to step up, in my opinion, and they're going to be top, if they're not already, top 5 in the world competing in cloud. You're going to have Amazon, you're going to have Apple, you're going to have Microsoft. This is, they are going to be compete. If they generated $7.2 billion off of cloud and cognitive software, they are growing. It's up 8.7%. Their Q4 systems revenue is up 3 billion or 16%. What you are actually witnessing in IBM is a transformation. Now, I remember when IBM transformed from their Aptiva brand. Again, I remember IBM selling personal computers, and I used to own one when I used to play Ultima Online. Don't bring Melnick back to his past, please. But I think the IBM earnings were solid. I think this has a lot of potential. And why do I say a lot of potential? Again, I just need to bring up a monthly chart here of IBM. This stock has not joined the all-time high fund. The all-time highs in IBM was 215.90 back in 2013. IBM, I think, has gone up leaps and bounds since then. And if you believe in the future of cloud and web services, which is, by the way, Amazon's biggest revenue generator. Most people think that Amazon make most of their money by sending you those brown boxes in the mail full of the items you purchased. No, IBM makes like over 80% of their money, I think, in Amazon Web Services, it's well over 50% in Amazon Web Services, cloud computing, etc., things like that. IBM is doing the right thing. They are going to that next level. They have a head start in artificial intelligence. They built a computer that beat famous world class chess players. You might say, well, what does that do to generate revenue? If you think artificial intelligence is the wave of the future, like I do, ladies and gentlemen, they already have a head start, a huge head start. And the way this company is going to transform is going to be a magical, magnificent thing, in this trader's humble opinion. Um, okay, so why don't we share with you guys our algorithmic levels, our robot levels, and right here they are for January 22nd, 2020. These are tomorrow's levels today. Screenshot it, write them down, do whatever you want with them. Don't tattoo it on your forehead. They change every day. Support, resistance, screenshot it. And of course, I will share with you my final thoughts. My final thoughts is I found it kind of interesting today that certain names can cause FOMO for others, like a name that was in our 2019 report and made our 2020 report as one of our top 5G names was Inseego. And I found it weird that Inseego was causing, FOMO for certain people in the room who weren't part of it, and for others, I'm sure they became, multimillionaires as a result of this call that we made. And they're traders who are just have done just really well with this name. And 5G is the wave of the future. Again, if you're a Newsbeat Live member, you get access to our one-on-one exclusive interview with Sequan CEO George Karam. And ever since we did the interview, the stock has rallied over 50% in value, closer to 60% in value, ever since our interview with the CEO. Again, just the stock is obviously just for educational purposes only, as always. But my final thoughts on everything is don't allow FOMO to creep in on you. If you're in a trading room, whether it's my room or somebody else's or a community, and you're going to notice a lot of traders making money on a lot of things. And for a lot of traders, I feel that's overwhelming because you say, oh, he's making money here, or she's making money here, or she's making money here, or she's making money here. Women are better traders than men, hence my I'm using the correct pronouns analogically speaking. He's making money here, she's making money here. It gets to a point where I feel that you're looking at it and you're like, maybe I should have been in that trade. If I did that trade, I would be in so much better shape. And then what happens is your mind starts to actually roll and say, if I was in that trade and not in this trade, I would be up this much as opposed to being up this much or even down this much. And it causes some form of psychological toxicity. One of the most important things for you to do is at the end of the day, you're going to need to be comfortable in your own skin type mentality, which is why a video like this to me is actually so crucially important that you can figure out the one thing you do. If you ever seen my bandit course, the first thing I ask you in the course is what is the one thing that you do best right now in the market? And most traders are like, well, I like this one the best. And I tell them, I'm like, I didn't ask you what you like the best. I didn't ask you what you like the best. I like the taste of a Brooklyn, New York pizza more than I like the taste of my spinach, but I know which one I'm going to end up eating and I know which one is best for me. The same thing applies when you're in a trading community. Some of the trades that other people do might not be best for you. I will tell you right now, even me, pizza is my favorite food. And I will tell you, it's a one-sided relationship. That's why we got divorced. I divorced pizza. Why? I loved the pizza a lot more than it loved me. I used to, fantasize about it. I would order it all the time from restaurants. And as soon as I ate it, zero love for me in my body. Zero. Can you believe that? The same thing comes with day trades. There are a lot of trades out there, ladies and gentlemen, which are not good for you. They're not healthy for your psychology. They're not healthy for who you are. They're not healthy for your life situation. That's why I try to avoid the 43-57 paradigm because I have found, and that's obviously strategies that work between 43 and 57% of the time, because even if they're when they're profitable or not profitable, they cause a lot of psychological toxicity and damage where they're unsustainable for the long term. It just gets to a point where you're so psychologically distraught that you just break down, you'll tilt, you'll start buying a lot more on the next trade because you lost on a trade, and you'll start doing things and you won't realize why it's happening. After 20 going on 21 years as an active intraday trader, I can tell you that I have learned that applying strategies that work 43 to 57% of the time, or on average 50% of the time, is the perfect way to become toxic, to do something stupid that you know you shouldn't. And I am telling you, even though that you're responsible for it, I promise you with every ounce of my living being right here, ladies and gentlemen, that it is not your fault. You're obviously, whatever account you're trading, you're financially responsible, but it's not your fault. You want to know whose fault it is? Our fault. It is our fault. It is our fault for bringing you these trades, acting like the only aspect to trading is you buy here, sell here, stop here. It's our fault for approaching trading in that sort of mentality. And you have to sort of break away from that mentality. And it's hard because people on Wall Street don't support that mentality. People on Wall Street don't support the mentality in which I'm sharing with you now. In fact, there are people to this day who will just literally come out, and they'll only do it on YouTube, of course, because it's anonymous, and they'll just literally thumbs down a video like this because they're afraid of content like this getting out there, or they're just trying to hurt me, or other gurus in the industry who don't like me for whatever reason because of the way I talk to people, and they'll just come in and thumbs down this video, really. And I'm sitting here thinking to myself, I could care less about all the petty nonsense. I became a stock trading guru broadcaster to help people, to genuinely help people get to the next level. That is my goal. If you did not reach that goal, I need to work harder to get you there. If you did reach your goal, I need to work harder to keep you there. And that's what it's all about. It's not me showing you a simple pattern like I showed you today of what's working right now. It's not about me showing you something that is just going to, throw at your face and say, go ahead and just execute it. Trading is a very nurturing thing. It's a very careful thing. There's a lot of other aspects to trading that you do need to take into account. And a lot of that is the psychology of the strategy you're applying. Most of the strategies that I see out there, practically all of them, have a lot of psychological consequences behind them that they don't talk about. Even when you're making money, a lot of times you're turning toxic. You double down, you triple down on a losing trade, and it comes back in your green, and you think you did something good. But then, of course, if you look at that trader, they have moments in their life where they blew out their accounts, and it just seems like a matter of when, not if. Don't underestimate that there are other aspects in trading besides for the ones that you could just see on a chart. Do you know that Wagyu beef from the Wagyu province in Japan, the most expensive beef on the planet, do you know that that beef, you know what they do with the cows? They brush their hair every day. They're listening to classical music. They're playing with them every day. They're smiling. They're happy cows. And do you realize that the Japanese have discovered by doing that with the cows, when it is unfortunately for them, um, when their time is finally up, that their meat actually has better fat to protein marbling throughout the entire beef. Do you know that? And that's what makes it so special. It's not just the breed of cow. What they try to do is they try to take that breed of cow and they try to bring it outside of Japan, but it's drinking very clean water, it's eating non-chemical stuff, it has no antibiotics, and by doing that, you actually produce the highest quality beef on the planet. That is why it works, because there are other aspects to beef than just having a cow, letting it get to a certain size, and you know bringing it to the point of where people are going to consume it. The same thing apply, and I know that's a very weird analogy, and forgive me on that one, but I need you to really fully understand that there are a lot more aspects to trading than just what you see on the charts. A trading strategy that you learn should have psychology entwined within the strategy. Otherwise, you risk having psychological toxicity. Because anybody could load something with artificial colors and flavors and chemicals to make something taste good, but at the end of the day, the repercussions for your body are going to be devastating, if not deadly. I hope you guys enjoyed this Newsbeat show. Happy trading, make money, and I will see you guys tomorrow on the Newsbeat.